Hello and welcome. In this video, let's talk about 5 tax benefits that you can get if you buy or construct house in India. You get certain deductions whether or not you avail any home loan, while some benefits are available only when you avail home loan. Besides, you get exemption when you sell a house and buy another. If you have observed, first I said deduction and then exemption. The difference between the two is simple. Exemptions are not at all taxable and these do not form part of our taxable income, whereas deductions are reduced from the taxable income. For example, agricultural income is exempted, but we get deduction under section 80C up to 1.5 lakh for a year. Some benefits are available whether or not you make payment, while others can be claimed only when you pay for it. More about it shortly. Even if these benefits are not part of your Form 16, you may still be able to avail this deduction while you file your income tax return. Just ensure that you preserve documents in support of your claim. Let us now list these 5 benefits. First, stamp duty and registration charges. Second is deduction on account of repayment of home loan. Third would be deduction of interest on home loan. Fourth benefit would be deduction of additional interest on home loan for first-time buyers. Fifth and the last is capital gain exemption under section 54 of Income Tax Act. In this video, let's discuss each of these benefits in detail. First, let's go through the conditions to be satisfied in order to avail these benefits. Then, let's understand what's the maximum benefit in respect of each of these 5 heads. We'll also understand benefits of availing joint home loan. Later, let's find out when these benefits could be withdrawn. In the end, some tax planning tips. But before we begin, if you haven't already, subscribe to my channel for latest updates and more videos related to income tax, GST, etc. First benefit is payment of stamp duty and registration charges. This deduction can be availed in the year of payment. These charges are mentioned in the sale deed, usually at the back of first few sheets of the sale deed. Max deduction that you can avail is 1.5 lakh for a year. However, this is within the overall limit of 1.5 lakh under section 80C. This deduction can be availed whether or not you avail any home loan. Also, if this deduction is not included in your Form 16, you can still avail this deduction while filing your income tax return. Second benefit is on account of repayment of home loan. Here, you can avail deduction of principal portion of EMI that you pay on your home loan. Here too, max deduction is 1.5 lakh for a year. Again, subject to the overall limit of 1.5 lakh under section 80C. This deduction too can be availed while filing your income tax return. If by chance this is not included in your Form 16, you may avail this deduction on the basis of loan repayment statement from the lender. Third benefit is deduction of interest under section 24B. Here you can avail deduction of interest portion of EMI payable on home loan. In other words, deduction can be claimed on accrual basis whether or not you pay interest, but this deduction can be availed only after the construction or acquisition of house is complete. But we would be paying a lot of interest even during construction phase. So this interest, that is interest for pre-construction period, can be availed as deduction in 5 equal installments. First, let us understand what is pre-construction period. It starts from the date of borrowing and ends on 31st March prior to the date of completion or date of repayment of loan, whichever is earlier. To understand this better, let us consider a scenario. Let us say you have availed home loan and the date of borrowing is 1st December 2016. Let us assume date of completion is 1st June 2021. Also, date of repayment, that is the last EMI that you would be paying according to the loan tenure, is 1st December 2026. So here the pre-construction period starts from the date of borrowing, that is 1st December 2016, and it ends on 31st March prior to the date of completion. So here the date of completion is 1st June 2021. So the pre-construction period ends on 31st March 2021. Let us assume interest for pre-construction period is 3 lakhs. So interest per year in 5 equal installments would be 60,000. Let us now consider another scenario. Here again date of borrowing and date of completion are the same. Let us assume date of repayment is 1st May 2020. So the pre-construction period starts from the date of borrowing, that is 1st December 2016 and ends on the date of repayment of loan, which is 1st May 2020. Here let us assume interest for the pre-construction period is 2.5 lakh. So interest per year would be 50,000. In both the scenarios, you will be able to avail this deduction for next 5 years. That is from 1st April 2021. That is the financial year in which the construction or acquisition is complete. So deduction in both the scenarios can be availed from 1st April 2021 to 31st March 2026. Next, let us understand what is the maximum deduction that you will be able to avail. If your house is self-occupied, then you will be able to avail deduction up to rupees 2 lakh for a year. If the house is let out, then there is no limit, but anything excess over 2 lakh can be carried forward and adjusted during next 8 years. This maximum deduction includes interest for both current year and pre-construction period. In order to avail this deduction of interest under section 24B, you can avail loan from bank, financial institution, your employer or friends. This deduction too can be availed while filing your income tax return if it is not part of your Form 16. This deduction can be claimed on the basis of interest certificate from the lender. Another condition that needs to be satisfied in order to avail deduction under section 24B is that the construction or purchase of the house must be completed within 5 years from the end of the financial year in which the loan was taken. Let us say date of borrowing is 1st December 2016. So 5-year period starts from 1st April 2017 and ends on 31st March 2022. Now let us consider a scenario where the date of completion is 1st June 2021. Is this completed within 5 years? Yes. So max deduction would be rupees 2 lakh for a year. Let us consider another scenario. Here date of completion is 1st May 2022. Is this completed within 5 years? No. So maximum deduction would be 30,000 for a year. Further, if the loan is availed for reconstruction or repair purpose, then max deduction would be limited to 30,000 for a year. Fourth benefit is deduction of additional interest under section 80EEA. This deduction is available only to first-time buyers. So if you own any other house on the date of sanction of loan, then you will not be able to avail this deduction. In other words, you will be able to avail deduction if you buy after sanction of loan. Stamp duty value of the house should be less than or equal to 45 lakh. Stamp duty value is also known as circle rate, guidance value, municipal value. In other words, it is the value which is used for the purpose of registration of the property. That should be less than or equal to 45 lakh. The loan should have been sanctioned between 1st April 2019 to 31st March 2022. And this loan can be availed only from bank or housing finance company. Unlike for claiming deduction under section 24B, where you could avail loan from even employers and friends, here the lender has to be bank or housing finance company. Max deduction that you will be able to claim is 1.5 lakh for a year. This is in addition to deduction under section 24B. Another condition that needs to be satisfied is that you should not be availing any deduction under section 80EE. Let's quickly understand what is this section 80EE. This deduction too is applicable for first-time buyers, similar to 80EEA. Here the value of the property should be less than or equal to 50 lakh, whereas in section 80EEA, it is specifically the stamp duty value. Then the loan should have been sanctioned between 1st April 2016 and 31st March 2017. So it was applicable only for 1 year. Here too, loan can be availed only from bank or housing finance company, and max deduction was 50,000 for a year. And this was also in addition to deduction under section 24B. Another condition was loan amount sanctioned is less than or equal to 35 lakh. So if you satisfy these conditions, then you will be able to avail interest under section 80EE, in which case you will not be able to avail deduction under section 80EEA. Now let us understand why joint home loan is more beneficial. Let's say you avail joint home loan, say in the name of you and your spouse. That means both you and your spouse are co-owners of the property. If so, both of you will be able to avail deduction. So max deduction in case of repayment of principal would be 3 lakh, that is 1.5 lakh for each of the co-owners. Similarly, interest under section 24B, here too max deduction will be 4 lakh, that is 2 lakh for each of you. and additional interest for first time buyers under section 80EEA. Here too max deduction is 3 lakh, that is 1.5 lakh for each of the co-owners. Fifth and the last benefit is exemption of capital gain under section 54 of Income Tax Act. Capital gain is the difference between sale value and cost of purchase of house. You will be able to avail this exemption if the house is sold after 24 months from the date of purchase. In order to claim this exemption, you are required to buy or construct new house within the time limit and other conditions which are specified in section 54 of Income Tax Act. Time limit for buying the house is 1 year backward or 2 years forward, and for construction it is 3 years from date of sale of existing house. Amount of exemption will be capital gain or cost of new house, whichever is lower. Let us now summarize all the benefits. First, stamp duty and registration charges. Max deduction is 1.5 lakh. Then deduction on account of repayment of principal where you have availed home loan. Here again max deduction is 1.5 lakh. However, this is within the overall limit of 1.5 lakh under section 80C. Effectively, you will be able to avail a max deduction of 1.5 lakh even though individual limits are 1.5 lakh. Then deduction of interest on home loan. Max deduction that you will be able to avail is 2 lakh for self-occupied property. If the house is let out, then there is no limit, but excess over 2 lakh can be carried forward and adjusted in next 8 years. Then interest on home loan for first time buyers. Here max deduction is 1.5 lakh for a year. In addition to this, you will be able to avail exemption of capital gain under section 54. Here the limits that have been specified are the maximum deduction that you will be able to avail. If the actual amount is less than the max deduction, then the deduction would be limited to the actual amount. Now, when these deductions could be withdrawn? First, stamp duty and registration charges and repayment of principal where you have availed home loan. This deduction benefit will be withdrawn if you sell the house within 5 years. If so, the deduction availed would be taxable in the year of sale. Then, capital gain exemption under section 54. Benefit of exemption would be withdrawn if you sell the new house within 3 years. And whatever exemption you have availed would be taxable in the year of sale of the new house. If you have opted for alternative tax regime under section 115 BAC, then you will not be able to avail deduction of stamp duty and registration charges and even repayment of principal under section 80C. You will also not get the benefit of deduction of interest under section 24B. Also, no deduction of additional interest for first time buyers. In other words, if you have opted for alternative tax regime, then you will not be able to claim these deductions, but there is no restriction for capital gain exemption under section 54. Buying house jointly and availing joint home loan can double the benefits, so it is better to opt for joint home loan. In order to avail this benefit, both husband and wife should be having separate source of income. In other words, both of them should be earning. So if possible, avail joint home loan. Interest under section 24B can be availed on the basis of interest certificate from the lender whether or not it is paid. So this deduction is not dependent on payment of interest. Plan to complete construction or acquisition of house within 5 years from the end of the financial year in which the loan was taken, so that you will be able to claim deduction up to 2 lakh for a year. Remember to avail interest for pre-construction period. If you have availed deduction of stamp duty and registration charges or deduction on account of repayment of principal for home loan, then sell the house only after 5 years. If you have availed exemption on capital gain on sale of house and purchase of new house, then sell the new house only after 3 years. In case of emergency, instead of selling, avail mortgage loan wherever possible so that you don't end up losing the benefit that you have already claimed. If you enjoyed this episode, you may like the video. You may spread knowledge by sharing this video with others. Thank you for watching.